Hello, everyone. This is Volney Cortez with Interactive Accountants, and
Hi, I'm Matt Shiebler with Interactive Accountants.
we would love to touch on a very important subject today, which is generating wealth. How does tax strategy, bookkeeping, and accounting links to that, Matthew?
That's a great question, Volney. First and foremost, we'll say that bookkeeping tells us how much profits our business is making, right?
Mm-hmm.
From there, we can make determinations then on how much of those profits we want to put to work outside of our business.
Okay.
By putting those profits to work outside of our business, that's what's going to continue to help us generate wealth. In addition, having your business run like a business instead of a personal checkbook also generates wealth. And most people don't understand that. For example, in my life, my business is one of my biggest assets.
Mm-hmm.
And I run my business like a business so that at some point in time in the future, it's easier to sell.
No.
A lot of people will, if they're in a business that gets a lot of cash, they don't put the cash into their business, and then all of a sudden they're trying to sell their business and a buyer's looking at it, and your POS says 2 million in sales, but only 1.7 ran through the bank account. Where's this other 300,000,
Mm-hmm.
right? And they're like, oh, that's the cash, and the buyer's going to be like, well, I don't believe you. It's not in the bank account. It's not on a tax return.
Mm-hmm.
Where is it? So you just potentially lost $1 million in valuation on your business. They're
That's
not
amazing.
doing good bookkeeping. So that's like how bookkeeping plays in.
Mm-hmm.
Tax strategy, different story. Tax strategy, some of the strategies we use actually build wealth.
Yep.
Through investments in oil and gas or through restricted property trusts that build whole life insurance plans for our clients. Now, some of our tax strategies as well don't do that. They're just expenses. You know what I mean? Like automobiles or fleet, stuff like that, strategically. But some of our clients have children, and children can actually work in our businesses.
Right.
It's just that you're not going to put a 2-year-old on the books, in my opinion. You know what I mean? But a 9-year-old or a 10-year-old, there's certain things that they can do within an office environment, or even with one of our logistics providers. Those kids can wash vans.
Correct.
Or they can sit with mom and dad and learn certain
The trade.
aspects of the business. You know what I mean? And they can be paid to do those things. And once they're paid to do those things, then there's money there. And then that money can be put to work outside of the business.
Very clever.
So, me personally, I like to try and hit all the buckets that I possibly can. So, a good portion of my profits, after taxes, are put to work in multiple ways. Working with a financial advisor, having an after-tax portfolio, stocks, bonds, mutual funds. I also like annuities. Now, this is just me. I'm not a financial advisor, so this is not financial advice. This is just how I live my life, right? So I have some annuities.
Mm-hmm.
I have also made some investments in privately held companies. As a limited partner, not as a general partner, right? So I'm not actively involved in those businesses, but I saw an opportunity to invest in someone, a founder, like I'm a founder of Interactive Accountants, and I chose to make those investments. In addition to that, there's real estate. Whether you're getting into long-term rental markets, short-term rental markets, or just improving your residence, to generate wealth. So there's multiple ways to generate wealth, but it all starts with our business and making sure that we're putting to work those after-tax dollars, potentially in some of those buckets,
Right.
like I have. that's what's truly going to generate wealth. You know, buying a Gucci bag, or I don't know if that's going to generate wealth, or buying a Rolex watch, I don't know if that's going to generate wealth, but maybe it does. You know, some of those things have value outside of that. And, you know, even generating wealth, it could be tangible things, you know what I mean? Like physical gold or physical silver, you know, those things, or maybe a Rolex watch, you know? Those things are a lot easier to pass on after death than something that has to go through probate or something tied inside of a will. You know what I mean? If you've got, you know, $10,000 in gold in your safe at home, you can pass that to your kid in a heartbeat, you know?
So we hear that there is sort of a threshold as far as age goes, where it can be called generating wealth, and after a certain age is preserving wealth. Do they have the same type of strategies, or they change?
I believe they change, in my opinion. Once you're at that point of preserving wealth, then most of those individuals are closer to retirement age or already retired.
Yeah.
Generating wealth is going to happen generally between 30 and 60, right? With the sweet spot occurring in between like 40 and 55.
Correct.
You know, those are the heavy duty generating wealth years, my opinion. Preserving wealth, different story. Then you are, you know, speaking with a financial advisor, more likely than not, right? About how do I preserve this? Do I want to start looking at some type of trust, whether that be a revocable trust or an irrevocable trust? And there are differences, you know. A lot of the trust fund babies, as you've heard of them, right? Those are all inside of irrevocable trusts.
Oh.
Right, where the beneficiary of the trust has no control over the trust. A trustee is appointed, and those are the guys and gals that get to say yes and no. You know, so that's more in line with preserving. A revocable trust is something that is set up so that, and this is, again, I'm not a lawyer, but this is how I look at them, is set up so that when I die, that revocable trust then moves into an irrevocable trust, and this is how things are laid out. So it avoids probate.
A great measure.
But preserving the wealth, getting back to that, I'm sorry.
Yeah.
That's looking at the wealth I've generated, right? And then making it, I guess the best word I can come up with is safer. You know, do I want to be in riskier stocks and bonds when I'm 60 years old? Or do I maybe want to start looking at safer investments, you know? And I don't know what those are these days, but you know what I mean? Talk to your financial advisor about changing your portfolio as you age. You know, the investments that a 30-year-old are making today shouldn't be the same investments that a 65-year-old is making today.
That makes a lot of sense.
So that's how I look at the difference between generating and preserving.
All right. So you know how to reach out to us, but still we're gonna reshare it. You can comment on this video. You can go to our website, interactiveaccountants.com, or you can directly reach out to Matthew.
Sure. You can reach me at Matt, M-A-T-T, at ia.tax, or I'm going to give you my cell phone, 914-263-9806. That's a direct line to me.
There you go. Thank you for being part of our community. We would love to hear from you, and hope to hear soon from you.
Bye, everyone.